Good day everyone! Welcome to another tutorial video of Account Tips. Studying accounting made easy. In this tutorial video, we will discuss one of the lessons in taxation, which is the computation of the income tax due. Before we start with the problems that we have prepared for today, we want you guys to familiarize yourselves with one of the most important tables that we will use and follow in computing for the income tax due. Shown in the screen is a table showing the graduated rates for individual regular income taxation. Now that we have the table, your question might be, how to use this? Do not worry, the sample problems that we will discuss today will help you understand how to use this table. Shown in the screen is the first problem that we will discuss today. Mr. Account Tips, a resident citizen, has a compensation income of 1,250,000 within the Philippines and 150,000 abroad. How much is the income tax due and payable? In solving for this problem, we must first know what kind of income taxpayer is Mr. Account Tips. As stated in the problem, he is a resident citizen. This means that he will be taxable for his income coming from within and without the Philippines. Thus, in computing for his taxable income, we just have to add 1,250,000, which is his income in the Philippines, and his 150,000 income coming from abroad. There. So this will result to 1,400,000, and this amount is the taxable income. Since we now have the taxable income, we can now compute for the income tax due. Using the income tax table, we first have to find which bracket the taxable income belongs to. Since it amounts to 1,400,000, then it belongs to above 800,000 to 2 million pesos bracket. Now, you may be wondering, what does the 130,000 plus 30% of the excess over 800,000 mean? Let me explain this to you. In computing for the income tax due, what we must first do is to subtract the lower limit of the income bracket from the taxable income. So in our case, taxable income is 1,400,000. Now, the lower limit of the income bracket is 800,000. So we must input here negative 800,000. So in order to deduct the two given, so plus 7. So the excess would be 600,000. Now that you already know that there is an excess of 600,000, this amount will then be multiplied to the bracket marginal rate stated in the table. Now, looking at the table, those taxable income above 800,000 to 2 million pesos have to use a percentage of 30%. So, we then multiply the 600,000 to 30%. There. Oops. Wrong. There. Multiply 600,000 to there. So the product would be 180,000. Now this 180,000 represents the 30% excess over 800,000. Because we now already computed for the 180,000, the last thing that we have to do is to add this amount to 130,000. following the income tax table. So input the amount, which is 130,000 to 3. Now we just have to add these two amounts. So sum, there. Okay. So the income tax due for Mr. Account Tips having a taxable compensation income of 1,400,000 is 310,000. Sounds easy, right? Let's try the next problem in the next sheet. Mr. Account Tips, a CPA, earned gross receipts of 1,300,000 pesos and paid 700,000 as expenses for his accounting practice during the year 2020. In the same year, he also earned a total of 600,000 pesos net gain from the sale of domestic stocks directly to a buyer. He also disposed a vacant lot at a net gain of 140,000 pesos. What is the income tax due of Mr. Account Tips for the year? In solving this problem, the first thing that we have to do is to know and compute for the taxable income, like what we did in the preceding problem. So how much is the taxable income subject to regular income tax? As Mr. Account Tips is a professional income earner, we have to deduct the expenses incurred for the practice of his profession to his gross receipts. So in order to get the taxable income, we will deduct 700,000 from 1,300,000. So the gross receipts is 1,300,000 and the expenses is 700,000, and we will deduct these two amounts. So the result of our taxable income would be 600,000 pesos. Now, what about the other gains or incomes that he earned? Sale of domestic stocks directly to a buyer and gain from sale or dispositions of real properties in the Philippines are both subject to capital gains tax. Hence, this must not be included in the taxable income subject to regular income taxation. Again, moreover, the taxable income is 600,000. Now, we will follow the steps that we have discussed in the problem earlier. Using the income tax table, the 600,000 taxable income is within the range of above 400,000 pesos to 800,000 pesos bracket. So, what we have to do is to compute for the 25% excess over 400,000 and add the resulting amount to 30,000. So, 600,000 minus the lower limit of the income bracket amounting to 400,000. So, we will have to compute P8 is equal to an excess of 200,000. The 200,000 excess will then be multiplied to the bracket marginal rate, which is 25%. So 25%, 25% of the compute multiplied to. So the resulting amount would be 50,000. As stated earlier in problem number 1, this 50,000 represents the 20% excess over 400,000. Because we have now computed for 50,000, the last thing that we have to do is to add the amount to 30,000 pesos according to the income tax table. So we will add put 30,000 and we will add these two amounts. So the income tax due for Mr. Account Tips having a taxable compensation income of 600,000 pesos is 80,000 pesos. Now, we only have one problem left, but this is quite a different scenario. So let's head now to our next sheet. So, Mr. Account Tips operates a convenience store while he offers bookkeeping services to his clients. In 2020, his gross sales amounted to 800,000 pesos, in addition to his receipts from bookkeeping services of 300,000 pesos. He already signified his intention to be taxed at 8% income tax rate on his first quarter return. So, what did you notice? Yes, the last part of the problem is quite intriguing as it states a tax rate of 8% which is nowhere to be found in the income tax table presented. So what does this 8% mean? According to Train Law, self-employed and/or professionals (SEP) can opt to be taxed at 8% of their annual sales or receipts and non-operating income instead of following the income tax table. This is called the optional 8% income tax. It must be noted that in order to avail this optional 8% tax, the income taxpayer must signify his intention to be taxed at 8% in his first quarter income tax return, and the income taxpayer's gross receipts, gross sales, and non-operating income must not exceed 3 million pesos. Since Mr. Account Tips this time operates his own convenience store and is offering his bookkeeping services, he is allowed to choose the 8% optional income tax as he is both self-employed and a professional. He also signified his intention to be taxed at 8% in his first quarter income tax return. And to compute for his taxable income, we would have to add his gross sales and his professional income. 8,000 and 300,000. There. So we would have to add these two amounts. So the total taxable income of Mr. Account Tips is 1,100,000. So this would mean that he is allowed to choose the 8% optional income tax as it did not exceed 3 million. Now, it is easier in this case to compute for the income tax due as we only have to multiply the taxable income, which is 1,100,000 to 8%. So we will have to compute, multiply this amounts, 8. So the resulting amount is 88,000, which is Mr. Account Tips income tax due for the year. Completing the 3 problems, this now ends the tutorial video about computation of income tax due. We hope that you learned something from this video, and if ever you have concerns, feedback, or questions regarding this video, you can put it on the comment section of this video. If you are interested in getting more accounting learning materials, you could like and follow our Facebook page named Account Tips. The link is provided in the description box. Thank you for watching this tutorial video and have a nice day.